my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your weekly technical analysis of Paris rapeseed, Winnipeg canola and Malaysian palm oil markets. Paris rapeseed. In mid-June, the market broke up and out of the early July to late October 2022 bearish Andrews pitchfork, after successfully running down it for so many months. Prices then became trapped. Is trapped the right word? Yes, I think it is. Trapped between congestion band below, which is 438 to 445 3/4, and a congestion band above between 513 3/4 to 519.5. Since early June, when prices fell into this trap, we have even seen the possible construction of a head and shoulders top pattern. Thus, it's still not complete, as we are apparently still forming the second shoulder, if that is what it turns out to be. You see, for a short while, I even considered the mid-July today action as a possible diamond top type pattern, but I now set that aside. Anyway, I've highlighted the preliminary neckline in dark blue, currently at 436 1/4. I expect I might have to finesse that at some future point. Now, going back for a moment to the oft-mentioned and no longer valid July to October 2022 bearish Andrews pitchfork, it does have perhaps one final duty to perform, and that is to highlight the question I put forward some 6 weeks ago and repeated ever since, and I quote, "So, what else does the recent actions show? Well, we could look at it all as a possible descending scallop pattern build here, but, and it's a big but, it will depend on what the market does should it get down as far as the May low at 386 3/4, and there's a lot in the way in the meantime," end of quote. Okay, so I am not certain now as to whether we will see 386 3/4 again. But 2 weeks ago, I further finessed this descending scallop pattern idea thus, and I quote, "In this pattern, what we are looking for is where the market will halt in its ascent, so that we can then have an idea of the subsequent size of the move. Then, we need also to ascertain whether this move is a further move higher or a pullback lower, so that we can apply the size of the proposed descending scallop pattern move to the already constructed actual move. At the moment, it is a little too early to see if the bearish action since the run-up last week, that's some while ago as you say, is it. But I will say this, halting at where the long moving average, which is currently at 506 3/4, crosses a significant congestion area, is a reasonable place to pay close attention to. I'll add this final comment. Data indicates that markets break lower sometimes, something like 8 out of 10 times for descending scallop patterns," and that's the end of the quote. Now, things have been a little bit cloudy recently, but as I said last week, I think that might be changing soon. Winnipeg canola. This market seems to be on a different schedule here compared to the other markets I've looked at. The drop over May, down through the 2021 low at 629.5 back 10 weeks ago, saw a subsequent recovery back up to the then declining and now slowly rising medium moving average, currently at 732.60, where the rally subsided, spending a couple of weeks in between the short medium moving average below, currently at 739 even, and the medium moving average was then above. This whole action over the middle of May to the middle of June period created a V bottom. Many weeks prior, I raised the question as to whether the V bottom would have an extension or a handle to it, and the answer was yes. We had a pretty clear one, and one that turned out also to be a bull flag. This prompted the move up 5 weeks ago that ended 3 weeks ago, and in the process, the March 2008 high at 770, which was an earlier all-time high, and a significant long moving average, currently at 784.60, and the September 2021 low at 839.20. They were all reached. This last one was significant as it was breached but not broken. The move up also made clear a mid-April to end of June reverse head and shoulders bottom. Thankfully, the topside target for this reverse head and shoulders pattern aligned with the ones for the bull flag. Anyway, all this action allowed me last week to draw a late May to late June bullish shift pitchfork highlighted in bright red on my daily chart. this had merit, but by mid-July we had a break higher out of it, which turned out to be a false break. And then this week we've had a break lower out of it, which still has the jury out on it as to whether it is a false break or not. This is where my original sentence at the start of this commentary comes in. You see, the market seems to be on a different schedule here compared to the other markets I've looked at. In the others, we are past the bullish pitchfork stage, whilst here we are only just now seeming to break it. I reserve my opinions on what may be next for at least another week here, as I am not certain yet as to whether this move below the lower time is a false break or not. In the meantime, keep a close eye on the long moving average, as I suspect it may become increasingly important. Bursa Malaysia crude palm oil. The mid-August to early November 2022 mildly bearish shift pitchfork, the one highlighted in green on my daily chart, is still running the show here after so many months. This mildly bearish pitchfork has guided prices more or less lower, initially between the upper tine, currently at 41.41, and the middle tine, currently at 35.09. Then for a while in May and June between the middle tine and the lower tine, currently at 28.77, before moving back up again in between the middle and upper tines. The more recent developments had seen prices push up and stabilise over the slowly declining medium moving average, currently at 37.59, and the flatlining long moving average, currently 38.92. This stabilisation had been very interesting, as the market has seemingly not only formed a recent hesitation area over July, but that hesitation area turned out to be a double bottom with a target for this pattern in the 41.20 area, just under the green upper time. Last week the market made a huge combined key reversal up and bullish engulfing pattern that even penetrated the upper time, and in the process that finally reached the target in the 41.20 area. However, prices then moved back down through congestion at 39.86 and the February 2011 high at 39.53, as well as the long moving average, halting for a while last week on the declining medium moving average, before this week punching lower through the medium moving average and the rising short medium moving average, currently at 37.24. That's also as well as a significant 50% Fibonacci line, the recent late May to late July move at 37.06, but not managing as yet to stabilize below these latter two indicators and supports. Taking a small step back for a moment, the recent action since late May to last week gave me the opportunity to draw a late May to late June bullish shift pitchfork that you can now just about see on my daily chart. Last week prices dramatically dropped down and out of this pitchfork, but it gave me the chance to lay out last week some potential downside targets for such a pattern if it were treated as a bull channel. Thus a primary target was in the 37.33 zone, with a secondary harder to reach target X2 down in the 32.77 zone. This past Tuesday prices reached the primary target. However, I'm not wholly happy with the secondary target, and whilst I may leave it sitting there, I am not a fan of it, not yet at least. You see, it all depends on what the market does with the following three indicators. 1. The declining medium moving average. 2. The rising short medium moving average. And 3. The 50% Fibonacci line at 37.06. This is because we do not have much support below until the big old middle tine in green, or actually above. We have resistance until the long moving average. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.